Thank you, Kirsten, for coming through. So I was trying actually to look at the statement here that came through because the results came through while I was on air. And I was thinking to myself, if I just read something along the lines, an environment of laterally negative GDP growth, volatile exchange rates, elevated fuel prices, and a domestic airline market that continues to be characterized by overcapacity, I would be thinking I'm leading here to some very bad set of numbers. And yet we're talking record numbers here. What did you guys do?
Thanks, Godfrey. Yes, we managed to increase profits after tax by 10%, but with a lot of blood, sweat and tears.
Oh, sure.
So, yes, we're actually quite pleased with the result considering the tough trading conditions. And Kulula in particular was impacted by the surplus capacity in the domestic market.
Sure.
That combined with rising fuel prices has created a bit of pressure on profitability. But again, then we've invested in the replacement of the aircraft, so the fleet replacement cycle.
Right.
And those aircraft are delivering significant savings in terms of and efficiencies in terms of fuel burn. So an 737-800 versus a Boeing 400 saves around 11% in fuel burn.
Sure.
And then with the MAX deliveries coming in 2019,
that's another 737.
That's another 737 MAX, but the sort of smarter version of the MAX,
of the
800, yes.
Yeah.
And that we can expect another 17%. So cumulatively, we're looking at around close to 30% savings in fuel consumption.
Yeah. So I'm going to follow you and go through the blood, sweat, and tears. Where was the blood? Where were the tears? Where was the sweat?
So definitely in surplus capacity in the market.
There was blood
we've
there.
got, and particularly in the low-cost carrier segment of the market. So there we've got Safair, Mango, Comair,
Yeah, I was
Kulula.
going to say it's okay, you can mention them.
Yes, yes. And so, yeah, we're all fighting over the same pot of passengers, essentially, and that pot of passengers is not growing.
So are you saying the market is oversupplied?
Yes.
Okay.
Yes, so there's excess supply in the market, and the overall size of the passenger market isn't growing at the same time.
We're struggling
and
with
that's a direct result of GDP growth.
Economy,
so we'd need to see, I would say, in around excess of about 4% growth in GDP growth in order to start seeing that actual market
Looks
size
like there might
grow.
be some more blood, Kirsten. I'm not seeing 4% on the horizon anytime soon. Sweat and tears.
Exchange rates continue to also be quite volatile.
Sure.
So we do have the competitive advantage that we've got a natural hedge in place. So around 1/3 of our revenue is hard currency based by virtue of our franchise arrangement with British Airways.
Yeah.
And that covers approximately 70% of our hard currency based costs.
Sure.
So that does help, but nevertheless, when you are investing in aircraft and they're dollar-denominated assets, the exchange rate does.
I was actually wondering what kind of a treasury you have, because this must be a big part of the business, given the volatility, number one, of oil prices in themselves before you add in the exchange rates. But still, in spite of this, you guys managed to increase revenue 7%, as you alluded to earlier, and you're also seeing an increase of 4% in passenger volume numbers. Maintainable, do you think? Until after Cyril and his politician friends have done the elections next year?
Yeah, so this is the difficult part, is to keep it going. And like I said, the market size is not growing. So at the moment, what we're managing to achieve is to actually take away some passengers from our competitors.
Sure.
How
do you do
How
that?
long we'll keep that going, I don't know.
How do you do that, though?
How do we do that? With better aircraft. So because of the savings that we're making on the fuel, for example, and maintenance costs, we are managing to keep fares down, particularly on Kulula, and compete and therefore increase market share on Kulula. But how long we can keep that going, I don't know. And hence, we have to start looking at, yes, we've got to absolutely maintain it. Can we grow it?
Yeah.
Not too sure without GDP growth, but hence we've got to look at the diversification strategy, which we remain committed to in the non-airline business segment.
Absolutely, non-airline business segment. We'll talk a little bit about the non-airline business segment. I wanted to talk about that airline business side of it, and I went through the statement very quickly. So I may have missed a specific mention of government support for SAA and its impact on competition and capacity in the market.
Yes, so that's an ongoing.
It remains a big issue.
It remains a big issue, and it's been going for so long that we sort of used to it, and we carry on. You know, we took that to court a couple of years ago. We were unsuccessful in opposing that because we want to play on a level playing field, essentially. And we thought about it carefully and decided not to take that any further. And so we continue to operate in the same climate as before.
Wow, well, but I'm sure you'll be getting some kind of comfort to see also the struggles that they are experiencing and the talk of consolidation. Perhaps that will talk to some of the issues that you were talking about. Very quickly, the non-airline business. I saw it's a big chunk of the business. Where are you doing good? Quickly, please.
Yes, so it's around 25% contribution now to profits before tax at least. And in particular, the travel business is doing really well. Okay. So that's, of that 25%, 60% is probably contributed by the travel business, and there's some good growth opportunities there. The lounge business has also performed really well, and the demand continues to grow.
They're very nice.
So we're only constrained there by the amount of space in actual airports, but we're working on that. And then the training business is another big opportunity for us. We've recently invested in expanding the capacity for simulators. So we've constructed another building to house another 4 simulators, which will expand capacity for external customers.
Because so that's at the moment, the continent?
Yes, from the continent, from India, and largely from Africa. You know, we've been constrained to some extent in that area because our own pilots have to train on 737-800s, and so the demand has actually been a lot internally, and this expansion will now give us scope to expand to third parties.
Excellent. Thanks, Kirsten, for coming in.
Thanks for having me.
That's Kirsten King, Comair's Financial Director.